Hey guys, how's everyone doing? You guys can hear me all right?
Yep, pretty good.
Beautiful. Excited to kick this one off with you guys. This is going to be a fun one today. We're just waiting for Dr. Murphy here.
Great to have you back, lawyered.
I was about to say the same thing. It's been a while, lawyer.
Yeah, glad to be back.
Is that a new PFP?
Yeah, just having some fun over the weekend.
What's that or what's it from? Just curious.
Oh, it's just an artist. It's not minted. It's an artist called Zufio.
Very cool.
It is a PFP, an NFT artist, but this is just something he made for fun.
Very, very cool. I've just pinned a tweet for questions for people as they start to pile in here. We got Dr. Murphy on stage, and I'm about to put out a tweet from our end that we've kicked things off, or we're about to kick things off here. I encourage everyone to do the same, and then we'll dive in as people start to pile in here.
Sounds good, guys.
Yeah, we've got an exciting panel for today. Got some really, really great topics. We spent a lot of time coming up with these, making sure that we'll have a really fun conversation. So thank you to Kaleb and Bitwig for joining us. Really, really appreciate it.
Yeah, definitely excited to be here. Excited to talk more about this. I think we could have the same conversation once every 2 weeks, and the conversation would be very different. So this is an exciting time.
Yeah, the world of stablecoins is evolving super, super fast. I feel like there's always something new coming out, a new use case, and I mean predominantly the enterprise space, at least the ones that, or at least the developments I'm interested in. So very excited to dive in here.
Bob, I just sent you a message on Gmail. Okay.
Hey, Joseph, we're about to kick things off here. Just getting some people in here, and we're going to kick it off. We're talking stablecoins and what companies are doing with them today and what they're going to be doing in the future. And we're very excited to have you. So I guess with that, we can kind of just dive right in. Dr. Murphy, our chief economist here at Infineo, is going to kick things off with a little bit of a primer on stablecoins for us in a second, if you're not as familiar. But kind of the goal of this conversation is going to be to evaluate stablecoins, what enterprises and companies are doing with them in 4 parts. We're going to start with the purpose of stablecoins after the primer from Dr. Murphy, and then moving into the state of adoption today, before moving into some real-world use cases. And then additionally, finishing off with the state of regulation, and then taking any of your questions. So if you guys see, we've got a pinned tweet right there. If you have any questions about anything we're talking about, feel free to drop them, and we'll get them asked to our panelists here. We're really, really excited to have Kaleb, Leija, sorry, correct me if I'm wrong, Kaleb, from Bitwave here. And he's going to be one of our experts today, along with the Infineo team, speaking on, enterprise adoption of stablecoins. So with that, I think it'd be a great time, Dr. Murphy, to have you kick us off here with a little bit of a primer on stablecoins, what they are, and I mean, how you view them.
Oh, okay, sure. Yeah. So I'll keep this relatively brief for those who don't know. I'm the chief economist here at Infineo. I think most of the people tuning into this discussion, will know what they are. But just to explain sort of like the big picture in terms of like what economic function do they serve, or at least what are some of the functions that they serve. I'm sure others will be discovered as people continue to use stable coins. But basic idea is, everyone was starting to get into things like Bitcoin and Ethereum, and the promise and what was so lucrative about them is that, oh, wow, it can really rise against like the US dollar, for example. So if you were an American holding Bitcoins and its value increased relative to the US dollar, that was great because you got a capital gain. But it was also very volatile. So it wasn't just that it moved up, but sometimes it would go down. And so that would slow adoption. Like for merchants, if someone was saying, hey, do you want to accept Bitcoin in payment for something? I know a lot of people would, they'd be running the calculations like, yeah, I want to boost sales, but then I don't want to be holding a bunch of, and not just Bitcoin, but also other types of cryptocurrencies. And I don't want to be sitting on a bunch of these, basically speculating on them. Like if I do want to speculate on a particular set of cryptocurrencies, I can go ahead and do that as an investor. But as a merchant, just making sales and taking in revenue, if I'm based in the U.S. and I use the U.S. dollar in terms of my internal accounting, I don't want to be making all these side bets just because of what my customers happen to be using. And so the great thing about stable coins, or one thing about them, is that it allowed for, you can remain inside the crypto world just by swapping one type of, cryptocurrency for another. Because as the term suggests, what stable coin means, why they call them that, is because they maintain their value stable. The value is stable relative to some other asset. So I think in principle, you could have something that was stable relative to just about anything. But in practice, a lot of times what people mean colloquially is, it keeps its value, this cryptocurrency keeps its value stable relative to some government issued fiat currency, such as the U.S. dollar, for example. Those are the most popular ones. So that's basically the idea that you can, quote, go into cash. And there's, all sorts of reasons in the financial literature about why you might want to do that in terms of hedging your exposure to volatile assets without, again, having to leave the cryptocurrency realm, that you don't have to go in and out of, on and off ramp in terms of your coins. You can just, it's much easier to swap from one type of coin to another rather than having to literally like sell off Bitcoin for US dollars that's sitting in a checking account somewhere. Instead, you can swap it for a popular stable coin or currency that's denominated or tied to the value of the US dollar, and you're effectively doing the same thing. Okay, so I'll stop there because, again, we can obviously get in the weeds of this stuff, but I want to leave more time for our guests. But that's basically the economic intuition behind why would you want to, because people say, what's the whole point? Why are we going through this issue, all of the rigmarole of creating this whole separate thing of cryptography and so forth, if we're just going to tie it back to the value of the thing people were using before? And I'm explaining, this is one of the main reasons why you might do that, and why it makes economic sense.
Dr. Murphy, that was an incredible primer. Thank you. And I think that really got a lot of people caught up here on our first topic, kind of the purpose of stablecoins. But in case you missed anything, Noah, Lawyer David, Kaleb, Alec, is there anything you wanted to add there about kind of the intuition behind stablecoins, the purpose, and how we should think about them in context of the broader financial ecosystem?
Yeah, I think one of the big things about stablecoins, and it's important to understand, is they're super important for just adding general liquidity into the crypto ecosystem. I know if you were in crypto back in 2015 to 2017, before stables really got big, a lot of exchanges you were still trading against Bitcoin, or I guess trading in Bitcoin pairs, and then Ethereum pairs, which people still trade in. But with the rise of Tether and then DAI and USDC, it really just allows for people are a lot more comfortable seeing things priced in US dollars instead of priced in Bitcoin or Ethereum. I think that was really important for the crypto ecosystem to grow.
Yeah, and it also gave you a place to go, right? Like if you were trading Bitcoin and you wanted to stop at a certain price and you get back at lower, you could get into dollars, as opposed to having to go from some other crypto back to Bitcoin. It's like there's no safety, and believe it or not, USD is still the place where you want to go when you're sort of out of trading.
Yeah, I think that's all very accurate in terms of how people are thinking about it. I'm the marketing guy, and so I think I kind of come at this from a slightly different perspective here, where I like to think about stablecoins from the two sides of what are the features of it, and then what are the benefits for people. And so the features, which I think we've already kind of covered a little bit, but it's super, super clear whenever you think about the new payment rails that are being enabled by stablecoins. It's reduced costs, and by costs I'm talking about like typically fees that you see alongside traditional payments, reduce costs and then increase speeds. And for speeds, we're really just talking about that settlement layer there. So with stablecoins, you can do things much faster and you can do things even cheaper. And so that's whenever you get into some really interesting use cases for businesses. which I know is kind of a little bit later in the agenda. On the other side, when you think about the benefits, I think these are exactly the same things that everyone here has already talked about. So there are 3 points that I would call out there in terms of like why people want to transact with stablecoins, like why in certain parts of the world and certain economies we're actually seeing some uptick here. Frictionless trade, right? So being able to, and this, I think Noah, you were saying this earlier, being able to say, okay, we want to exchange, we want to add liquidity back into the crypto markets. We want to do it in a frictionless manner. That's kind of the first use case there. One thing that is really interesting is people are using it as a store of value, basically saying, okay, if I, let's take certain parts of the world that have a deflationary currency. If I have one denomination of stablecoin today, will I have that same denomination tomorrow? Is that a more stable use of or a stable store of value versus any other currency that might be more readily available? And the last part there is really just thinking about if I have one denomination of a stablecoin, if my car is worth one denomination today, is it going to be worth that same amount tomorrow? That's that stability piece that we were talking about. So from a features and benefits perspective, there's some really, really interesting pieces of stablecoins. So excited to be here, excited to dive in.
And I guess on that note, I realized I've been a really, really rude host here, Kaleb, and I forgot to let you introduce yourself and Bitwave to our listeners here. And so before diving any deeper, I mean, our audience is familiar with Dr. Murphy, Noah, Lawyer.eth, and Alec, but if you'd like to introduce yourself and Bitwave, I feel like that might be a great thing to do before we continue to dive in here.
Not rude at all. In fact, I actually prefer it that way. Too many panels and other Twitter spaces can take 30 minutes just doing the introductions. I'm Kaleb, head of marketing for Bitwave. Bitwave is a tax accounting and compliance software system for businesses. We help enable digital assets for all of these financial and compliance teams. So if you are working at any organization, Web 2 or Web 3 that has digital assets on your books, we can help make sense of those. And so we'll typically pull in your on-chain transaction data into your existing ERP solution. So we work and harmonize those two sides of the equation.
Beautiful and succinct. Thank you for that, Kaleb. And with that, I think we can move a little bit deeper into our topic of the purpose of stablecoins. And I just want to pose a question here and hear your guys' thoughts. How are you guys thinking that financial institutions are looking at stablecoins today? And are they looking at them as a benefit or more as like a threat for companies like Visa and PayPal? I'm curious to get your guys' take on that.
Yes, I mean, I think it can go one of both ways. It depends on what companies like Visa and PayPal, how they choose to adopt the technology. I don't know too much about, payment systems, but I imagine that I know for a fact there's cards right now where you can debit a crypto wallet. So it depends what technology ends up coming up where you can use stables just like you can use cash in a debit account. And that might end up being a very popular option for, people in countries like, Lebanon, Argentina, Nigeria, whatever, country with a very unstable currency. If it would just allow people to feel more confident about holding US dollars. And I don't know if Dr. Murphy can speak about this, but I know there's some debate about if people holding US dollars in stables is actually good for the dollar or bad for the dollar. But I do think that when it comes to payment processing companies, I think if they choose to embrace it, it could be really great for them. And if they choose to fight it, could end up really hurting them.
Sure. So I guess it depends what we mean when we say, is it good or bad for the dollar? So I think, and I'll just be real fast because again, I know that the people here probably more interested in the technical stuff. So allowing the more people who get into stable coins that are denominated in the US dollar, for example, yeah, I think that broadens and sort of like solidifies the network of the dollar's reach and scope. And so in that sense, it makes it more likely that the dollar is going to stick around for a while. I recently was on a zero hedge debate where we were debating whether the dollar was going to be the world's reserve currency, at a certain date in the future, that sort of thing. So I think that, it gets more entrenched in terms of the new coming digital crypto blockchain age that if the dollar gets its its roots in now, then that makes it harder to be displaced down the road. So there is that element. On the other hand, though, I think that it's just so much more nimble to be doing stuff with, on the blockchain, that when things change down the road, it'll be a lot easier to switch over away from stable coins denominated in dollars into, denominated in euros or the Chinese yuan or, some new basket of currencies or whatever the thing may be down the road. So in that sense, if people, I guess to answer your question, it depends what the alternative was. If it means people are switching to stable coins based in dollars and away from standard, checking accounts or other money market funds, things like that, then I think that means the dollar is less likely to stick around. But if it means like new merchants in Asia or something who right now don't have standard checking accounts, but they want to hold dollars, and so stable coins gives them a very easy way to get into it because they can't open a bank account in their local jurisdiction with literal US dollar denominated balances, then it goes the other way. So as a good economist, I'm kind of saying both answers at the same time. So there you go.
As any good economist would. And just on that note, didn't PayPal recently come out with their own stablecoin? So like you're saying, no, I think it's really interesting that some payment processors, or actually, in my opinion, I know Visa is working with blockchain too. So it does seem like they're starting to lean in. But I don't know if it's direct. Kaleb, do you have anything to say on that note?
Yeah, Jackson, I'll hit on both of those actually. So you're absolutely correct. So Visa is not only enabling stablecoins, they are settling stablecoin transactions. That was announced, I think, in the middle of last year, and then PayPal launched their own stablecoin. You're absolutely correct. They're also incentivizing, and most of its activities overseas, right? I know we'll talk about this in a moment, but they're specifically for PayPal, they are incentivizing their users right now to make money transfer, to make overseas money transfers, with things like zero fees and really trying to incentivize more activity on that over there. There was one thing that I wanted to say to your question though, which is I found this really good quote from Dr. Sean Stein-Smith, who said the largest financial institutions in the world would not be investing significantly in these applications if there wasn't a clear-cut financial return, right? So it all goes back to what these companies are seeing in terms of future return on that investment. Right now, it looks like there's going to be a clear-cut way for these institutions to start building on these networks, to start embracing stablecoins. I do think traditionally outside of the U.S., and again, we'll talk more about that, but there are some real positive financial elements here that these institutions are seeing. So I think it's super exciting. And I'm sure maybe this is kind of your next question around, where are we seeing adoption? But there are some really good bright spots here in terms of traditional financial institutions embracing stablecoins. I would say, like, also to your question of are they working alongside or competitively against some of these? I think one way to frame this is stablecoins are not replacing necessarily currency, right? I think this is kind of what we were talking about a minute ago. Stablecoins are more about the payment rails themselves and enabling the addition of more liquidity in crypto, but also more US dollars in circulation, and in terms of just like making the power of the dollar greater through the use of dollar-backed stablecoins.
That was an incredible quote and some incredible insight there, Kaleb. I really, really like the quote you gave, and as you kind of hinted at, it was setting me up perfectly for our next question, which is exactly, I mean, if all the biggest companies in the U.S. and abroad right now are looking at stablecoins, they're getting involved with them, there's got to be a reason, and that reason is mostly they see clear-cut returns. But what do you think that they're looking at in terms of the roadmap for adoption over the next 5 to 10 years? And what can we expect from these larger enterprises that are working with stablecoins? Any thoughts on that?
Yeah, so I think, I know we touched on countries that aren't the U.S. or less developed countries, but I think adoption is really going to blossom out of there. And if I'm one of these companies, I'm probably testing a lot of these products with DeFi rails in these countries where people are, eager to look for alternative currencies. you have to also remember, in Africa, for instance, I'm pretty sure already there's more people with crypto wallets and bank accounts. And so it's a lot easier to get a population like that to adjust to, this type of change than is our population when, we have a lot of people that are, people in their 40s and 50s that will probably never even, bother with stables or DeFi or crypto in general. Whereas a lot of people in these other countries we're talking about arguably have no choice but to deal with it. So the adoption will really start there. And when we see how efficient and how easy a lot of these are, companies will realize it behooves them to bring it over to the States as well.
Yeah, I think that's absolutely correct. I'll say a couple things on this. One, something interesting happened last year where we saw more stablecoin inflows going outside of the U.S. So stablecoin inflows basically meaning that people who are receiving, businesses that are receiving stablecoins, more of them were being received outside of the U.S. than within the U.S. So that flipped last year. Same thing happened with stablecoin issuers, where outside of the U.S., more companies, businesses, and issuers were actually generating those stablecoins for more transaction volume than they were within the U.S. here. So U.S. is largely dominated by obviously Circle. You've got Tether that has about 70% of the market outside of that. So that flipped last year, and I guess to the question of like where we're seeing more of that adoption and kind of where the market is today, it does feel. I'd love to hear everybody's thoughts on this, but it does feel like we're kind of at like the start of a new stage of adoption here, where historically we've seen a lot of retail activity with stablecoins, right? Like we've seen a lot of retail trading. We've seen that for some time now. We've also seen remittances, it just taking off incredibly well. So those two are really, really good, strong use cases that are pretty obvious, right? So with retail, it's providing that additional liquidity within crypto. On the remittances side, I talked earlier about some of the features of stablecoins. So efficiency and cost effectiveness, like that is a very clear cut and dry use case. And so I think for those reasons, you've seen some really strong uptick across those two areas where it feels like we're maybe, hopefully, I think, entering into a new era here is when you start to think about enterprise adoption, right? So we haven't really seen this super, super strong in a lot of places. You've seen, places like DAOs that are, or other crypto native companies that are starting to make, payments to contractors in stablecoins, payments to their own employees and to, some of their own, within their business. But that's not kind of the norm right now. And I think in order for us to hit real enterprise adoption, it can't just be, us talking to ourselves within Web3. It's got to be, some broader adoption. So I guess the point I'm trying to make there is we've seen really strong use cases on the retail side, on the remittances side. And I think for me, like the goal would be, or the hope would be, as more people are seeing the benefits of stablecoins, as more people are getting comfortable with the technology, that's going to, I don't know, it's trickle up a thing. Let's use it for the sake of the example. If more people start to use it, there's going to be a critical mass of people who are starting to get behind the idea of using stablecoins in their day-to-day lives. And then that's going to, quote, trickle up into enterprise. Please don't quote me on trickle up. I don't think that's a thing, but you hopefully get the point for the example.
I definitely got the point, and the stats back you up there, Kaleb. I just threw up another pinned tweet. If any of you in the audience are really into stablecoins and haven't checked this out yet, I highly suggest you do. RWA XYZ is a premier data aggregator and media player in the digital asset space, and they've recently come out with a stablecoin dashboard. And so in the pinned tweet, you can actually see the huge increase since 2021 in on-chain stablecoins and their adoption. And so just wanted to throw that up there, food for thought for everyone as we move into our next section. We're going to start to talk a little bit more here about the state of adoption today. And so I'm just curious, I guess we did just kind of answer our first question about how the best way, or actually, never mind. I'd love to hear your guys' thoughts on the best way to think about measuring progress with stablecoins. Is it going to be through charts like this, looking at like total number of on-chain stables, or is it going to be through volume? How are you guys going to be measuring progress in stablecoins with enterprises? Is it going to be through rollouts of products?
I I think that success would look like more mainstream crypto adoption from institutions. I think that stablecoins can provide really good on-ramps and just ways for various institutions to participate, specifically on the lending borrowing side. So I think if we're able to get into an environment where crypto is, taking off and the market cap of the entire industry is growing, then that's really a testament for stablecoins and how far tech has gone to, really provide, I guess, like positive infrastructure that institutions would want to use.
I think another way to measure it, although it is like, I guess it's a cheaper answer, but I think total market cap is important. Right now, I'm just looking at it. It's about $150 billion, which obviously is a super low number, right? Like we sent over, I think, 160 billion to Ukraine already. And so like in terms of like all the money out there, the money flowing, we're still it's really not a lot of money. And, Tether makes up 100 billion of that. So I think having a more diverse range of coins growing in their total market cap is important, because I think like anything, I think you'll have different stables for different purposes in different industries. Obviously, having it unified to some extent is nice, but I do think that different jurisdictions will prefer different things with different regulations. I'm also curious about the whole regulation aspect of it. Like, does anyone here have any experience with like what exactly it takes to launch a stable coin? Like, is it just a matter of proof of reserves? Do you need banking license? Or does anyone have any idea how that works?
I mean, it's a little above my pay grade, right? But in the past, I think it was more sort of guerrilla and just sort of make it happen, and then worry about the regulations after and convince people that it's valuable. It's not like proof of reserves insofar as it's convince the players that it's those are valuable, and then the goalposts shift and the proof shifts and the things they're holding change. But I think regulation sort of to the extent that it exists, it evolved around what was popping up, as opposed to the other way around, which I'm gonna say was sort of a trickle up with those concepts.
Did we just coin something? Did we coin the next phrase on crypto Twitter? This is amazing.
I mean, I have no problem. I think it's
no. I want to say I totally agree with you on the market cap comment there, because if you take some of the traditional metrics that people are talking about, so things like trading volume, it only tells one part of the story, right? It basically says, okay, how many stable coins were actually moving in any given amount of time, right? So that's one point. But if you go back to our earlier conversation, that part is not the only thing that people are finding valuable with stablecoins. They're also finding the idea of actually holding and reserving that stable value within their assets and within their, quite frankly, their bank account, right? So having that market cap number there actually kind of helps complete a little bit more of that story to say, okay, if people are constantly trading, is that a bad thing? Maybe not. Maybe they're finding value in just holding and storing that value within stablecoins, so that they can access that liquidity in a little bit of a faster manner later on, and do it in a way that's a little bit more cost efficient.
Yeah, I just want to bring up what Lawyer mentioned before, kind of the fake it till you make it thing. I mean, I think everyone can agree Tether very much faked it till they made it in terms of the reserves, and I just think it's hilarious that it ended up making $6 billion last year after, for a long time, people not being sure if they actually had it backed by anything, but they managed to figure it out.
Yeah, if I could just chime in on that too, it's interesting. So as an economist, my area is money and banking, and one of the big things is what the debate over fractional reserve banking, and hey, in a genuine free market, would that persist or not? And like among Austrian school economists, that's like a big thing when we want to pick a fight with each other. That's what we usually go to, that topic. And so we were looking at the market with a lot of interest to see, how does that work? Because again, it all plays out. Like if you're an issuer of stable coins and if you literally just look, even to be in 6 month treasuries, strictly speaking, if everyone shows up next Thursday and wants USD, then you can't do that. You know what I mean? Like you don't have it. It's so that's, and then of course, if you get it, you look at Tether's balance sheet, they're not literally all in dollar denominated. They have other things that they're into as well. So I think that they're very safe, but I'm just saying it's just an interesting dynamic to see, because the trade-off is if the issuer is just literally in, checking account balances spread out among 800 different accounts around the world with conventional banks, well, then the fees are going to be higher, so that there's going to be more drag. And ultimately that's going to have to get passed along to the end user somehow, like in terms of the fees coming and going or whatever. They got to make up the money somehow. Whereas if the issuer is allowed to invest in things that have more of a yield, but yet they're not completely liquid in terms of turning it back into the underlying thing that it's supposed to be pegged to, then, they can make a profit on that. So they can pass through those savings, as it were, to the end user and have lower fees or whatever. So with all this stuff, it's very interesting. And yeah, my understanding is right now, it was more of they just started launching it and people could figure out if they trust it or not. And probably if one of those blows up, then I'm sure a lot of regulators would come in and, do things after the fact. But as of right now, yeah, I think it's more just the market test and can they convince the public that, yeah, you want to hold our stable coins because look, we can back it up.
And Dr. Murphy, you bring up a really, really interesting point here that I don't know if we've addressed yet, that I think that we definitely should for our listeners, that really their stable coins are dollar denominated digital assets, but what does that actually mean? What is underlying and pegging these assets? And so it'd be great if you guys could help add some color and help our listeners understand the different types of stable coins and how these actually function and why some may be better than others in terms of what is actually going on under the hood with them. I don't know, Dr. Murphy, if you want to kick it off or if someone else feels like they would be able to give a good primer here.
So yeah, so I think like and I'm curious to you guys. Obviously, other people on this panel have more in the trenches knowledge of this, but yeah, my understanding is big picture. In theory, it could be anything. Like that you can have algorithmic things where it just like adjusts the supply, the quantity of the outstanding coin in order to try to regulate the value that way, as opposed to it's just a unit for unit. We have a literal, $1 bill sitting in a physical vault somewhere. Like that's pretty safe, but then there's a lot of transaction costs too. Well, we have it because even conventional checking account balances, they don't literally have $100 bills sitting. You know what I mean? So what if that bank fails? Well, there's FDIC. Well, what if that gets? You know what I mean? So when you really push it and say, what does it mean to say, is this backed up by the underlying asset? There's a lot of wiggle room there in terms of what do you mean by that? Because like I said, a lot of people think, oh, yeah, if you're sitting on treasuries, that's pretty good. Like when we colloquially talk about, the Chinese hold such and such amount in dollars. Well, it doesn't mean they have $100 bills in suitcases, and it doesn't even mean they have checking account. Usually what they mean is, they have their central bank is sitting on treasuries that might be of, shorter or longer duration. So it's the same thing here. I think, the ultimate acid test is if I ever want to, turn my stable coins into US dollars or the equivalent, can I do that? Whether that's because there's literally redemption or just I always can sell it off to somebody else. Like that's what, the end user cares about ultimately. And it's sort of a, if the market trusts that's going to happen, then that works. And I think where you're going to see problems is if these, if there's a crisis or something and people try to turn them into actual dollars, and then we're going to see the weak points in the system.
I think I'll just respond to that, which is it goes to the heart of transparency, right? Like people need to have a level of confidence in what they're using, like where their livelihood in some cases, in many cases, like where those dollars or stable coins are actually held. They need that level of confidence, right? So there's, maybe I'll speak briefly to a little bit of legislation that's going through, specifically here on the U.S. side. There are two, I would say, bigger bills that are kind of making their way, and I think we'll probably see at least not one or at least one or both of these resolved this year. But the Clarity for Payments Stablecoin Act was introduced last year. It's going through a review period right now, but it's exactly what we were just talking about. It starts to add some definition where there really wasn't any before, and so things like requiring proof of reserves in some capacity. I think for this one specifically, they said, you can have a mix of, if you're a stablecoin issuer, it doesn't have to be cash. It probably should be, or maybe in some cases it's, there's some kind of a cash equivalency. I think you mentioned short dated treasury bills, insured funds are also included with that. But the whole idea here is adding that definition to say, okay, you are a stablecoin. We need to make sure that consumers have protections here, that consumers have confidence here. And so in order to issue a stablecoin, you have to have some type of highly liquid currency actually backing that up. And so you'll see probably some progress on that. I think within that bill also, there's just some additional pieces around consumer protection funds or protection for consumer funds themselves. And I think, the other piece of this is, you've got companies like Circle who are already, I think for the most part, really taking some of this stuff seriously. And so even though there hasn't really been, a lot of legislation that's, been solidified specifically stateside here in the U.S., there are, I would say, there are goodwill efforts from a lot of these organizations that are really trying to get to some level of consensus in terms of how they treat consumer protection.
That makes a lot of sense to me here. And honestly, I'm looking at this RWA dashboard in front of me. And one thing I find super interesting here is that of all the largest stablecoins, Tether, USD, DAI, First Digital USD, True USD, I can keep going. The biggest ones, they're all, the underlying asset is predominantly money market funds, U.S. Treasury deposits, and bank deposits. But there is one outlier here, that is Athena USDE, which is a derivative of short ETH perps and ETH itself. It's a USD denominated stablecoin, but just looking at it in the flavor of other stablecoins, it kind of reminded me of the Terra Luna death spiral with an algorithmic stablecoin. And so how do you guys feel about the transition kind of primarily to asset-backed stablecoins from algorithmic? I'm personally thrilled about it, but just curious if you guys have any thoughts there.
And there's a different ways to do algo stablecoins, like the Athena had being both long and short Ethereum. You keep it pretty much the same except for the fees associated. But what Luna was doing is they were minting Terra. They were kind of pumping it up with kind of Ponzi-nomics, APY, and so that type of algorithmic stablecoin was kind of doomed to collapse from the start. But I think people are trying to figure out better ways to do algorithmic stablecoins that are purely crypto-based, like Athena. And I know Arthur Hayes has suggested a similar version with Bitcoin. But I mean, in that case, there is something backing it at the end of the day, unlike Terra. So just food for thought, the different types of algorithmic stablecoins.
Yeah. If
I don't think DAI has had like any sort of reputational hit either, right? Like there's still at least one pretty good stablecoin out there that's algorithmic.
Yeah, if I jump into on this, because I was curious too when that first happened, and I'm curious to hear your guys' feedback on this. But like as I looked into it, it was my understanding was that there are like some maxi types who think that no, having real world assets tied to blockchain is just a contradiction in terms. You're just mixing metaphors. You're defeating the whole purpose. The whole purpose of the Satoshi white paper was that it's trustless. You don't need to rely on anything. And so if you're bringing in real world assets, redemption, then what are you doing? Then the trust has to be who's going to hold custody of that asset and give it to me when I want it. And I don't care what the blockchain says. If someone's not delivering me that physical thing, then the whole thing's out the window. So there's that element. So my understanding was like that's the appeal of the algorithmic approach, where it's it really is just living on the blockchain and it does everything automatically. And so you can just go verify the code and whatever. Then you can see, oh yeah, this thing looks like it'll work ex ante, and so let's go ahead and try it. Whereas again, the redemption, to have the thing being held that you can redeem it for it, that seems like it's a lot safer, from a common sense, practical perspective. But then on the other hand, then, you can see someone say, well, what's the point of doing that with blockchain? So obviously here, when we're doing it in Infineo, we are just straddling that line of, we're trying to put real world assets on the blockchain. So of course we think that it does make sense to sort of mix those two approaches, to have blockchain technology with still conventional real world assets. But anyway, I'm just saying it's, at first with the Luna, I was mystified. Why would anyone want that? But then later I realized, okay, yeah, I could see why that might look like the purest approach to this kind of a problem.
And Lloyd, I do think that I was wrong there slandering algorithmic stablecoins. It wasn't algorithmic. I was off there. Thank you for putting me back on track. you wanted to add any color there, it would be great.
No, it's colorful enough.
Also a DAI, just for the sake of context too, DAI is in a way more similar to what we're trying to do at Infineo. So a DAI, you like to get DAI stablecoin, you're basically taking a loan out against your, Ethereum or whatever else can be in a smart contract. I forget what other assets they have. And then to redeem, you have to redeem your collateral by, giving back the DAI. It's not 100% how Luna was doing it, but I know that was really propped up by their ridiculously high, 20% APYs. So there's that. So there's a lot of different ways to do algorithmic stablecoins. And obviously there's more honest ways to do it than others.
Well, now that we've kind of went deep with the different types of stablecoins and added a lot of color, very, very colorful, as Lawyer Daddy had said, I'd love to kind of move into, we do have 2 more sections, but we may not have time to address them both. And so I'm going to pick my favorite, which is the real world use case examples. And so I would love to just hear you guys, each potentially, if we could go around the room, speak about one real world example of stablecoins being used today that you're impressed by, that you liked. If you don't have anything to add, I'm not going to call on you like cold like that, but I'd love to have someone start that off. I will call on you cold if you guys make me. We've been good before.
Could you repeat the question?
Yeah, just any real world example of stablecoins today. Like an example that you've really been impressed with. Something that potentially our listeners haven't heard. Not just USDC. I'll to a different chain.
I'll do a quick plug for some of my friends over at Centrifuge. So Centrifuge is collateralizing real world asset lending, and so it's slightly different. It is getting liquidity through DAI, which I actually think up until the middle of last year was highly based back on USDC. So there's a lot of overlap there. But if you look at some of the things that are happening in the real world asset space, specifically like with organizations like Centrifuge that are providing those loans based on collateralized real world assets, there's just some really, really interesting use cases happening across different parts of the world to enable and it all goes back to kind of the idea that we've been talking about from the start, which is there are like in the US, in Western Europe, there are very easy ways to access capital. That is not the case everywhere. And so whenever you've got some of these places where you've got a depreciatory or a currency that is depreciating, you've got those challenges. You've also got maybe some areas that, for example, like countries that are putting restrictions on the types of lending and where businesses can actually access liquidity. So saying that businesses are no longer able to trade with other parts of the world for whatever reason. You've got these mechanisms in place that are more decentralized, that are going to allow for those easier access to capital. I think Centrifuge is a really good example of organizations that are doing that. They've been around for a while. I think Jackson, you were mentioning the RWA coalition. They're a big part of that as well. So any of those guys that are really taking the concept of real world assets and then trying to find the best, not only regulatory way to approach that, but really a more standardized version to accelerate that part of the ecosystem. I think that's a really, really interesting part of the ecosystem that hopefully we'll see more uptake across on a global scale.
Yeah, I mean, I'll just add to a similar real world asset thing. If you guys are familiar with what Goldfinch is doing, they're a decentralized global credit protocol. And so, it's allowing access to capital to a lot of people around the world that wouldn't previously have it, like Kaleb was saying. But I mean, past like a protocol like that, where someone can invest in a project, I think it's really awesome that, you can be a farmer somewhere around in the world and you've been, saving your money in USDC. Well, because of stablecoins now, you can go and take a loan against your money at like a bank, like a DeFi bank that you don't have to have a relationship with. You don't have to trust the bank. So just like the access to capital around the globe is super important for, just global economic growth. And ultimately will only become more and more important as this century turns on. But yeah.
Kaleb, did you have something to add there?
I was just going to say, I think part of maybe the challenge here is that there are just so many good potential use cases for this technology. And I think we're really just now starting to tap into some of that. So there's a lot of early stage exploration that's happening. And one way that we're going to start to see more of that happen is, you've got a number of software companies like Bitwave, quite frankly, that are bringing in a software compliance element. And for the purpose of that is by saying, okay, so these organizations now have the ability to borrow against stablecoins. They have the ability to actually pay their pay their employees in stablecoins. They actually have the ability to transact with these things on chain and do it in a way that is compliant with whatever the regulatory landscape looks like today and tomorrow. And so at Bitwave, that's really what we do. We enable, we're trying to get ahead of all this to make sure that whatever the FASB board on the accounting side says, whatever the U.S. regulatory landscape looks like, we are deeply following these trends to where our platform can enable businesses of any size, Web 2 or Web 3, to have the reports that they need immediately to account for that, and be able to make those faster insights. And I think like those, Bill is a great example. There are others in the space, but that's a really, really good example of how, we're just at the start of this. And so, hopefully we'll see a bigger explosion outside of the retail and the remittance space. But I think there's a lot of really good traction here, and there's a lot of really smart people working on this problem.
And another thing I wouldn't say excited, but very interested in, I know we didn't get a chance to get into this today, and this could be a space all by itself, is the central bank digital currencies, which, at its core are stablecoins, and the whole idea of programmable money. That comes with a lot of dystopian ideas and thoughts. And I'm not excited for, central bank digital currencies. I think they're a bad idea, but I am curious to see where that goes in the next, 5-10 years.
Definitely very, very curious to see the development of CBDCs over the next little bit. It definitely could get very scary, very, very fast. But it's a very, very interesting industry that I'm keeping my eye on as well. Kareem, I see you've requested to speak. We're not taking additional speakers. If you do have a question, we have a pinned tweet that we'd be happy to address any questions in. And kind of just hearing you guys talk a little bit about the real world examples of stablecoins being used, it got me thinking kind of, Kaleb, about how enterprises and businesses can use them in the future, either for enhanced business liquidity, integrating it into payment systems, kind of like you were saying, using it to facilitate an increased velocity of international trade, payroll and remittances, obviously. And then obviously you can work these stablecoins into DeFi. And so there are really, really cool benefits that from an employer side you could offer that wouldn't be possible today, just making your cash payments. So with that, are you guys, did any of those excite you more than the others? Are there any that you want to dive in a little deeper to or have any opinions on and have seen rolled out today or are seeing the seeds being planted already? Or are these all a couple of years off from now?
I'll say from my side, and Jackson, I'm so sorry, I do have a hard stop here. So I'll leave everybody with this. We are entering into what feels like a new part of the ecosystem here, where we're moving beyond some of the unregulated parts of the ecosystem, where we've seen, and this happens everywhere, but we've seen bad actors co-opt good technology, right? And that's really, I think, where you see a lot of the reactionary legislation coming down from the not just the U.S. but in other places as well, where we've talked about Terra Luna, we've talked about some of the other pieces where those are leading to not only some reactionary regulation, but also some needed regulation. And so the idea here is if we start to get more definition around how businesses should transact with stablecoins, how I mentioned earlier there are accounting and finance regulatory bodies as well. Adding more of those definitions are only going to make more businesses comfortable with actually leveraging these technologies. so I think we are moving out of, you can say this for the whole crypto space. We're moving out of, a previous model, and we're moving into more real world use cases that I find incredibly exciting. So that's all for me, Jackson. Team, thank you all for having me on here. I really appreciate it. This has been a lot of fun.
It's been a lot of fun having you, Kaleb. Is there anything that the audience should know about before you leave? Anywhere that they can find you or Bitwave or anything coming up soon?
Totally. Yeah, we're so Bitwave platform, obviously. Find us here. I see Bitwave is listening in here. Also, if you just click on there, follow us on Twitter and LinkedIn. We're pretty active. We are all over the finance conference landscape and the crypto landscape as well. You'll find us at conferences. We'll be at Consensus coming up here. Right now, we're at the Game Developers Conference, all evangelizing the idea that there are some really, really exciting ways that businesses can work with digital assets, not just stablecoins. We work across, a number of digital assets here, and we work with businesses that are really exploring the next generation of that utility. So if that is you, if you want more information, find us at Bitwave, find me online.
Thank you so much, Kaleb. Have a great rest of your day. And Dr. Murphy, Noah, Willard, Alec, I'm good to go another 10 minutes if you guys are. And I think it's actually going to be really, really helpful to get, Willard, your insight on our next topic, which is kind of the state of regulation around stables right now. And Noah, I'd also love to hear your input, same with Dr. Murphy and Alec, kind of just like on a macro perspective, how the regulatory landscape for stablecoins has evolved, shifted, matured over the last couple of years. And yeah, we'll wind things down after we just talk about this real quick. So yeah, this is our last topic.
I'm curious to see what lawyers to say, because personally, I feel like you hear so much about Bitcoin and Ethereum regulations and the ETFs. You hear about the SEC going after ICO people. People are raising money this way, that way. But I feel like, at least in my purview of X and the news, I haven't really heard too much about governments coming after stablecoins all too much.
Yeah, I'll jump in for a second. I'll defer to lawyer on the specifics, but yeah, in terms of like here in the chatter, I have seen people like in the conventional, like as you can imagine on Twitter and whatever, I follow a lot of other economists and sort of like public policy analyst types, and yeah, they're looking at stable coins, I guess, under the umbrella of what you might call shadow banking, where it's like, oh, this is performing a lot of the economic functions of traditional banks, but it's outside the purview of, conventionally run banks that are regulated. There's all sorts of things in place to protect the consumer. So that's kind of, in other words, for a lot of the reasons that the proponents of stable coins tout them and say, oh, look, it gives you all the advantages of conventional checking account balances, except there's a lot more flexibility and convenience and not all the bureaucracy and red tape and da-da-da-da. Well, likewise, if you're coming from the point of view, if you think the government is there and protects the little guy from these, crazy bankers and stuff, then, you might be skeptical of it. So it's just in terms of setting the narrative. Like, I know I've seen a lot of people that are very skeptical of stable coins for that reason, that they think it's sort of like an end run around conventional regulations, and therefore they're saying if these things are going to be allowed to exist, they need to be regulated just like regular banks are.
Thank you for adding that color there. And we actually have lost our regulations expert here, lawyer.e. And so with that, I think we're going to bring this to a close here. It's really, really been a pleasure having Bitwave join us. Kaleb, their director of marketing, was able to add some incredible insights on the enterprise adoption of stablecoins today and what it's going to look like over the next couple of years. We at Infineo really try and stay at the forefront of anything going on in the digital asset and blockchain space. And so we do that by inviting companies at the forefront of the industry that are pioneering new solutions, such as Bitwave. And so it was really a pleasure to have Kaleb on and to do this together. And a big thank you to my team, Dr. Murphy, Noah, Alec, and Leija for joining on our end and adding their insights. For those of you in the audience, this is something we're doing every week. We have a Twitter space next Tuesday at the same time, same place, but it will be a different sort of flavor. We alternate our topics between whole life insurance, which is another side of our business, and the real world asset tokenization spaces that you just heard today. So if you're here for the digital asset stuff only, we'll be back in 2 weeks. And if you're interested in tuning into our whole life insurance space, we will be back next Tuesday. If you're interested in keeping up with Infineo, I highly encourage you to go to infineo.ai and sign up for our newsletter at the bottom of the page. That'll keep you up to date with everything we're doing, our Dr. Murphy's latest articles, any live events we're having that week, plus an interesting news story curated each week just for you. And with that, do any of my panelists have anything to say before we sign off?
No, thanks for everyone who came. Really fun show.
Yeah. Thank you, everyone, for being here.
Thanks, Jackson. Thanks, Noah. Thanks, Bob.
Thanks, everybody, for tuning in.